Welcome back, and joining me with more insight on the day's trade is Jordan Toy from Legacy Family Wealth. Thank you so much for your time. Jordan, it's quite interesting. There isn't a lot of company news out on the JSE, but lots going on the global front. And let's actually start off with the woes of the chip makers. Today, on the one side, you have regulatory moves being imposed on NVIDIA. And then on the other side, you have disappointing financial metrics coming out of ASML. Not a good day to be a chip.
Certainly, yeah, a lot of pressure on the semiconductors, that's for sure. I think, so you've talked about the two different aspects to it, and they are quite separate, but yet they both form part of the broader ecosystem. So from ASML's perspective, I think, and broadly, we're going to see it in this whole earnings season, right? That earnings season's running to end of March. I think the market's primarily focusing on the outlook. And ASML talked about lower order expectations, so that was obviously largely a negative factor, and I think one that affected the share price quite significantly. Then on NVIDIA's front, that one was quite surprising to me, and I'm sure frustrating to NVIDIA's management. So, you know, under the Biden era or the Biden presidency, you know, they wanted to restrict the access that China had to some of their more sophisticated chips. So then NVIDIA went, and I don't know if they built it from the ground up, but they sort of tailored a specific product for the Chinese market. It's not their latest and greatest, their Blackwell chips, right? In hindsight, and now the US has obviously paused that. They've said you can no longer sell those chips into China. I do get where the US is coming from, because they're kind of sitting there and most likely saying, well, you know, the lower tech chips didn't stop China from developing something like DeepSeek. So we need to prevent, you know, and be more restrictive in terms of the quality of product that they're getting out of NVIDIA. So I do get it from that perspective, but the reality is NVIDIA has now, you know, built this product line specifically for that market, and they talked about a $5.5 billion sort of write-off or charge in this quarter. So pretty negative for NVIDIA, and you're seeing that, you know, largely affecting the Nasdaq as a whole as well.
And talking about China, we did get good news from there for the first quarter. GDP actually surprised to the upside and grew 5.4%. Of course, we know that for the full year, the target is around 5%. But we have actually had some downward revisions from a number of financial institutions. But noting that this was the first quarter, what was your reading of that?
So I think it's largely in line with the expectations, maybe a little bit ahead of expectations. You mentioned, you know, a lot of the big investment banks from Goldman Sachs, Citibank, Bank of America have all downgraded their growth expectations. And we're seeing sort of the estimates ranging from, say, probably 3.5% on the low end up to sort of 4.5%. We're seeing fewer and fewer estimates close to the 5% mark. And China themselves have said that it's going to be a very difficult target. They've said it in a number of different ways, but it's going to be a tough target for them to reach. China often has quite a strong first quarter, and naturally, you know, this is before the reciprocal tariffs kicked in. So, you know, the real data that we need to look at is April and forward from there. So, I think a decent number, not one to be sort of turn your nose up at, but the real test is coming in the quarters going forward, and we know that the economy is under pressure. I think from the stimulus front, what's going to be more interesting is, you know, there is some stimulus in the market. The market's likely hoping for more, and I think arguably more will be required considering the pressure that the tariffs are going to place on them. I've seen estimates that, you know, the tariffs as they currently stand could sort of have a negative impact of around 2% on China's GDP, which is it's a massive number. So strong numbers out of the first quarter, but let's see how the rest of the year pans out.
South Africa's GDP growth isn't even at 2%, and you're telling me that tariffs could shave off 2% from China's GDP. So that is quite a big number. What's frustrating for me, though, is that a lot of this economic data is backward looking. So you can only, because we know that the tariffs kicked in April, and a lot of these are for March, February. Even the US retail sales were for March, and those surprised to the upside. I don't know, the best I can ask is this the last of the good times?
I don't think so. Maybe in the short term, right? We know that there's going to be volatility going forward. So it feels like the US presidency has given us some breathing room after the sort of pretty extreme tariffs that came out on April 2nd. But we're not out of the woods yet. We already now started this week talking about tariffs in the semiconductor sector. He's mentioned pharmaceuticals again. So we're not by any stretch of the imagination out of the woods yet. There's probably a lot more volatility to come. I mean, it was interesting. I saw United Airlines, unusual for a US company to come out with two profit sort of estimates in their outlook, right? So
I saw that.
Yeah, so they've come out with a base case, and then they've come out with a sort of secondary recessionary case, both of which still looked relatively positive, but it just shows you the level of uncertainty that they're dealing with. And they actually mentioned that it is impossible to predict what's going to happen this year with any degree of certainty. And I think from United Airlines to Nvidia to any of these companies, it's just an extremely uncertain environment to make decisions in.
Even Delta Airlines, I actually think it was last week, they came out with some comments, and I think they even pulled back on the outlook because I think they were starting to see shakiness in their bookings as well. So it's going to be quite interesting to see how these companies navigate this volatile macroeconomic environment. Well, a company that has remained resilient in all of that right here at home is Clicks. I saw that the share price was actually up by a solid 4%. What did you make of that growth?
So you talk about the tough environment, and I think our South African companies and the management teams have to be given credit. You know, I think that dealing with and trading in a tough environment is not something that our teams are unused to. You know, they're familiar with it. You know, we talked about it when inflation picked up. Inflation, you know, it picked up to 6-7+% in the US, and everyone was sort of losing their heads. And it's not unusual. You know, our companies here are very used to dealing with. They know what the playbook looks like. So, pleasing set of results out of Clicks. I think it continues to be a defensive counter, one that's delivered across a number of metrics. Quite pleasingly, I saw that their profit margins or some of their margins were increasing. They were selling more private label products. So one that continues to deliver for shareholders. And we'll see how their continued store expansion plan and pharmacy expansion plan goes. Some strong brands in the stable. So we'll see how the future looks, but a pleasing set of results out of Clicks today.
All right. Well, let's swipe to your stock pick for today. What are you choosing?
So today I wanted to speak about Spotify. Again, I think one that most people will be familiar with. One that I really like because it's a broader theme that I think is something to keep an eye on going forward, specifically the streaming aspect. You know, we know the likes of Netflix and sort of the video aspect to it. But I think the audio streaming sort of sector broadly is a theme that's got a lot of legroom to go. So you've got the biggest players being Spotify by quite a big margin with around 675 odd million monthly active users. Then you have Tencent Music with about 550 odd million, and then behind that you've got Apple Music at 140. So Spotify by far and away the leader in terms of monthly active users. It's a bit more nuanced than that because we have to look at, you know, what percentage are premium paid subscribers, what percentage are not, but even the ones that are not are, you know, they're on an ad-supported sort of tier, so that there is some earnings coming out of that. Pleasingly, they turned to profit for the first, or posted their first full year of profit, I think in around Feb. So a theme we really like, you know, it's still founder-led and founder-managed. The CEO and chairman is the founder of the company. So one we think has a lot of legroom to go, and one that, you know, the share price I think is up nearly 3 times over the last 5 years. So it's performed well, and sort of a longer-term theme that we think investors should consider looking into.
Well, interesting rankings there. People still judge me for using Apple Music instead of Spotify. Anyway, thank you for your time. That was Jordan Toy from Legacy Family Wealth.